what? A gap. We do gradients on wicks. We never want to see, in this case here, lower than 50% or consequent encroachment. So any respect of this wick should be limited to the high, 75% of the wick, and then consequent encroachment, which is half. Go over here, look what it's doing. It's going down, but it won't breach on a closing basis midpoint of that wick. So the market does what? It rallies above this high here. What's above that high? Buy side. Someone is chasing that lower when it's green. This is an hourly chart. So inside that weakness in that hourly candlestick, someone's going short. Where they're going to place a stop? Right above that high. So the market does what? It gravitates up to it here, and we drop down, respecting consequent encroachment there, and we rally. What do we do now? We start expanding aggressively towards that weekly mitigation block, and we trade up into that level there, and then we consolidate. Markets do not top like this. So we have, what is this? What does this area right here become? Once we trade through it here, the same thing I told you this becomes, a balanced price range. From this candlestick's high here, up to this high, then back down. Once we clear this high here, this whole shaded area becomes a balanced price range. I am not concerned about price wanting to, at any time up here, going back down inside this range. So for stop loss management, your stop loss can be anywhere in this range and feel pretty confident that it's not going to get there. So how would I do it and sleep good at night? 75% of that range, if my stop is below that, I'm comfortable with that. We have the market rally aggressively here, which is a buy side imbalance, sell side inefficiency, which is the long name for BISI, B-I-S-I. But I want you to think about what is occurring here. At this time of day, at 10:30, after the news driver, we have this swing low here, and it breaks below that. This segment of price action right in here is a fair value gap. So we would anticipate markets like this to reprice up into this candlestick or higher, and then reprice lower. Why? What time of day is it? New York lunch macro. So above this high, we have buy side liquidity, and it's entering the time of day where the lunch macro, which is going to do what? It's going to run for liquidity. Where is the liquidity at for this time of day? It's below the lows of the morning right here. This is your swing low right after the news driver hits the marketplace. Everybody that went long or was long before this market report was out, they have their sell stop resting right below that. That's exactly what the lunch macro will do. It'll run from this fair value gap here, drop down aggressively, leaving what? Most of this portion of this open,